All right, what is up, everybody? Hope you guys are staying safe out there as always. Welcome back to the Rev and Trades Trading Channel, and today we are going to be looking at actually some pretty interesting things. I hope you find them interesting. I want to go over just some thoughts on profitability. If you have been trading for the Bumper Bands Trading Channel has been up for probably 6 to 8 months now, maybe even close to a year. Getting here in July, August, I believe we're coming up to a year. And if you have been trading along the journey and have found yourself not being profitable or as profitable as you would like to be, I just want to discuss some things today that could hopefully help in your trading journey. As always, nothing I say is financial advice. This is just how I tend to approach my trading strategy. And the first thing that is very important to have when you're wanting to be a profitable trader is zero ego. And I don't know if it's possible ever to have zero ego, but a very low ego and be able to admit when you're wrong. Because if you cannot admit when you're wrong, you can never improve upon what you've been doing. So if you're able to, look back and find places where you made some choices that did not lead down the path you wanted to go, did not lead towards profitability, it's really important to kind of analyze that and be able to make adjustments in the future based on that. So we're going to get into some of that stuff today. Before we get into that, I want to just highlight a couple of things that have been going on in the markets in the trading strategies that we have here available to Patreon subscribers. If you are not a Patreon subscriber, check the link in the description below and you will find access to all of these tools that we'll be looking at today. The bumper bands are specifically the tool that I have built, and the Crown SKX is someone I have partnered with that builds the trading kind of framework. And there's also a link and a discount code for that for those members or for those users who do not have this. Any of these strategies with the bumper bands are, you can trade them by hand. You can, find the signals, because I do have now signal flags here that you can, choose to take if you want. For example, signal flag back here, that was a nice little entry exit right there. We got, just all over. If I hide this, you can kind of see right there. Nice little winning trade again right here. Nice little winning trade. So yeah, those are just some things that you can, whether or not you have the skeleton key, you can still use it to trade by hand. However, the skeleton key does allow users to automate the trades, and yeah, it's pretty great to use. So would definitely recommend using that. What we are looking at right now is the new one-day AI bands. So these are useful on trading higher time frames, more like a daily. And actually, these are more specifically right now to a day. I probably will, in the near future, go in and put the Exponent AI feature in this tool, and that allows you to use it on other time frames as well. It's not currently part of it right now. This is kind of the first iteration of the one-day AI. But it is, yeah, super useful for several. I built a one for the index, not for stock index for the ES1, and then one for Bitcoin. A lot of other cryptos you don't have enough. We don't have enough. What's it called? History to build a long-term strategy. And for a daily strategy, it's really important to have a lot of history to build on. So, even with like I was talking about earlier, or I don't know if I mentioned this, this is over 10 years. Let's kind of look at those trades real fast. So the first trade was January of 2015, and we're obviously in 2025. So a little bit over 10 years, and a nice P&L. Obviously, Bitcoin has exponentially just crushed it since then, especially in the early years. So when I'm building a one-day strategy, I'm more thinking for users that want to maybe buy and hold Bitcoin. So as you can hold Bitcoin as the underlying collateral asset, and then trade on top of it, so you get the gains of Bitcoin plus what the strategy does. Or again, if you're kind of trading by hand, I think more recently this, again, it's a really high profit, percent profitable and really high profit factor. So if you want to just take some advantage of the sideways market. It does that really well. For example, right here, took a little win, went sideways for a while. It did close under the bands a few times, so if you want to take a few trades here and there, that doesn't necessarily trigger. It's possible. Definitely not, as ideal. Especially this one here that closed way below the bands, and this is why I have the band proximity AI section right here, where if you see it having a break under or break above, it kind of really signals reversal points. So this would have probably been a pretty high percentage. It'll show, it'll just show a little figure up here that's a B and an arrow that kind of shows that it's extended, kind of far to the upside or downside, whether it's support or resistance. And you may find, interest in that, whether you want to try to take a short or a long based on that. It's totally up to you. This is options out there. But yeah, so those are some cool features on the new AI bands. This one has been in a trade since, let's see, June 22nd. And, oh, man, I don't know if you guys can hear that. We're getting some crazy lightning going on outside. It's storming here real bad. But it's up about 6%, 6.5% since that trade. Yeah, which is a nice little trade there. This specific strategy is going to be only available for the Master Builders section, but there's another really great strategy available for all members, and the 1D AI tool itself will be available for any subscriber of the complete tier. So if you want to get access to this, you just have to be a complete tier member. And yeah, I was going to mention, let's see, this is, okay, so this is, yeah, I mentioned this is available for the Master Builders. This one is available for all members. Okay, so the main differences here are this one does not have a % stop loss. It does have ATR risk and basic risk and emergency risk, so it does have a lot of, risk, I guess, safety nets there, but it does not have a max % stop loss, which some users may not be comfortable with. And I personally probably would have some kind of max stop loss just in case we had a black swan event or worst case scenario. I don't want to get liquidated. This is using the break-even stop loss, which is a nice new feature of the skeleton key. So I definitely recommend checking that out if you have not done that so far. But it allows you to set an amount of bars and or percentage to hit a break even and an offset for that break even. So when it breaks even, you can actually still be in profit, as you see happen over here. This hits the break even right here, but it's still in profit. Now, would this have gone on to maybe being a little bit more profitable? Yes, but over time, it does seem that the break even helps some trades get out at better places. You can find, like right here, for example, this trade got out in profit, and it would have, not gotten out until like way over here, somewhere over here, at a loss. So you would have wasted some time. You would have not gotten some of these wins in the middle here. So got a couple small wins right there. So it does over time actually help the strategy out. So anyway, that's kind of some features going on here. I'm going to jump to this real fast. This one does have a 5% stop loss enabled, and it still has, it is a little bit longer. So this goes since 2012, but it still it has a great, it's only 16% drawdown, which is, as I always say, a little bit misleading. You should definitely look over short periods of time to see if that drawdown remains the same. But as you can see from the general chart, it has a nice steady curve up and to the right and only hits a few little bumps here and there, which right here it goes from 735 down to 714. So that is about 20%. So obviously it's higher than that. It is a bit of like a 20% drawdown there. However, during that period of time in the market, Bitcoin was plummeting. I think dropped over 60%. So it definitely we don't want to jump there yet. It definitely seems like a pretty solid strategy. I'm excited about the AI versions of all these bands that have been coming out. Very, very cool stuff. Okay, let's jump into what I started to mention earlier about profitability and how to kind of think about and reanalyze your trading strategies if you are not profitable. So it's very, very easy in any trading scenario to be not profitable. I don't know if it's not, I have not researched this, but what I've heard the statistic is like, 90+% of traders are not profitable, especially day traders. Obviously, buy and hold, it's a lot easier to be profitable over time if you're holding for 10 years plus. The markets generally always have gone, have been in profit after 10 years. There's definitely been long periods of the market where it's gone sideways or down. But yeah, so if you're a day trader or even I don't know if you call this a week trader, depends on what time frames you're trading on, and you're not in profit, some things to think about and look at. All right, so first of all, I want to show some strategies that I've built and posted a while ago, in places that I was profitable and then maybe was not so much. So one of the ones I just clicked on earlier, I believe it was this one. Okay, so this is the Bitcoin 10-minute strategy. There's a few mistakes that I made personally when trading this strategy. The first one was I started trading not at a great place of time. Now, that comes with a caveat because you can't really tell a lot of times in the market when a great place to start a strategy is, but you can kind of look at support and resistance areas. If Bitcoin is at its all-time highs and not in a breakout, what I would consider a breakout, which is we can get into some definitions of that later on, but to me that's a kind of a no-go zone. Generally, times that I want to start trading strategies is when Bitcoin is at the lower areas of its range, or you can find some other things. You can maybe base it on momentum or a few other higher term time frame indicators. That's a little bit more up to you. I'm not going to necessarily give you specifics on that today. Maybe we'll talk about it a little bit. But what I personally do not do is start trading a strategy when it's at its all-time highs, because in any strategy you want to look at. Let's look at this real fast, and then we'll come back here. Okay, so this is another strategy I traded for quite a while, was very profitable in, and then you can see over here it's been down and then kind of sideways in the last month. It tried to regain some ground and then went down again. So this is altcoin. So that was mistake number one I see many people making, and I made for a while, was trading altcoins for long periods of time. And I happened to start trading Solana probably over a year ago, maybe a year and a half or almost 2 years ago now. And I started trading it at an incredible time, doubled my account value in probably a month or 2 months, and then in another couple months, doubled the account value again. So it just had so much momentum. And so what I started doing, this is a little bit earlier on when I was trading some of my bumper band strategies, is I scaled into that account too high too fast. So I don't remember exactly where it was, but I think it was probably somewhere around here. I started trading, back here somewhere. I had a smaller account size at that time. I was just testing these out, and so once I saw it taking some wins, I somewhere around here really quickly put a lot more in the account. And then when this sideways action hit here, especially this little turn period right there, I got pretty nailed right there because I was trading, over 3 times the amount I was trading back here. And so all of those losses really 3x'd because all of a sudden I was trading way more. And so on this trading strategy, it only goes down, what would that be, 55? I say only, it's probably pretty big. 39, so about 15%. However, if you're trading 3 times the amount, that's more like 45%, right? So that's a pretty massive. I would really have been like down here probably. So over a few weeks period of time, my account was still in profit, but I had really given back quite a bit of gains. Then eventually the strategy started doing well again, but probably around here sometime I lost a little bit of confidence in it and took some money out, wanted to put it in some other strategies, which isn't necessarily a bad idea. But then it started to do well again. And somewhere, I did stop trading the strategy completely somewhere over in this area. I think once I saw it, it might have been over here somewhere. I just saw Solana after Trump announced his altcoin, Trump coin, whatever, based on the Solana network. I kind of saw that as a topping signal because usually when there's that much hype around anything, it's a sign to maybe be a little bit more cautious. So I did stop trading right when Trump announced that. I sold most of my Solana holdings and and happened to at that point make a good decision and get out the top. But it's very easy to see that and say, oh, all of this stuff is going to be built on Solana. There's all this hype around it. I want to trade more. And obviously since then Solana has really, at least the trading strategy has not done well, and Solana as a whole has not done well. So if I show you this chart here, this is another thing to I keep an eye on. So I would not say that this strategy is completely, this is one that's still open and up on the Discord. I would not say that it's like ruined, or that the strategy is, gone bad or anything like that. And a few reasons I say that. One would be looking at Solana as a coin in general and what it's done compared to what it's done in the past and what's happened in the past. So to look at that, we'll look back here when Solana, had its first all-time highs. It had a peak here, right? Big dip. This was the all-time high, and then the massive bear market right there, okay? So what happened during this season of the market, the kind of the mass chaos, excitement, this is what was going on. So you had the first peak, first down, which went down 160 to 33, 34. So that's about, what is that, 25%. Then went up again to 165. And then all the way down to the worst period at 134. So that's 30. So it had a 30%, decrease in value for trading. I'm not talking about Solana as a coin in general. I'm talking about sorry, I need to take a drink real fast. I'm talking about the trading strategy in general. And it took from trade 160 to trade 550. About 560. So we can say about 400 trades. The strategy did not break its, well, I guess it did break a little bit right there, barely broke its all-time highs. But in general, it kind of went sideways. You can see from here to right here, the strategy is going sideways. And then at that point, you're on a run. It still took, if I go right here, we're still actually going sideways at about trade 650. So for about, 500 trades, if you had started trading at the worst place, it took 500 trades for you to be at break even again. And then you had this massive run up, a little bit of sideways consolidation, another massive run up, a little sideways, massive run up, okay? So this was like, obviously the worst period to start trading Solana, and it's doing these massive peaks and valleys right there. The best time to start trading Solana would be when it was down way over here, which would have been, it wasn't even the bottom it wasn't even the end of the bear market. It was still, it was still like, probably only a year. We can look at specifics, and that is something I do. I'll go into a list of trades. I'll kind of analyze where the bear market started, where the strategy started doing well, all of that stuff. And so yeah, it would be very easy at this point to say, hey, this strategy is not working, it's garbage. And then all of a sudden, from this point on, the strategy just starts running and going crazy. Now, eventually, Solana did catch up and even surpass it by a lot. And then now what's happened, Solana is actually down below. If you would have been trading the strategy this whole time, you would be better off, even at this point, with the massive run Solana has gone on, still having, now, again, this is important, if you would have started trading, at this point here. So, yeah, I kind of just look at the strategy and say, based on the volatility, what did it do in the past? Based on this volatility, is it doing something different or about the same as it's done in the past? And this volatility, it's not the full bear market, but it absolutely, went down. Let's see. I'm just looking at kind of percentages based on this number over here to get a general idea. This is not specific, but it's a general idea. So from 760, we're just looking at 760% because this is trying to compare buy and hold percent to strategy percent. 760 all the way down to 314. So, what is that? It would be about 50%, whatever, 55% decrease in value right there. So absolutely massive. You can kind of look from the peak here to the valley. Probably more than that, but the first valley, let's just look at that. 750 to 250, yeah. Nasty drop. So that's definitely a worse worse down period. Had some ups and then even more down. So that was absolutely a nasty run. However, so if we kind of look at the general all-time high area here, 530, 528 to the valley, the lowest point was 500. Okay, so that's only about 28%. I say only, it's a lot, but it's about 28% down compared to, let's see, what was this? 68 to 34. So about 34%. So it's within 4% of what it's done here, and it's actually done a little bit better than the last. So if I start seeing Solana stabilize and trade sideways or trade up or whatever, and the strategy still continues to do poorly, all right, at that point, I'm saying the strategy is it's gone bad, it's become irrelevant, whatever, and I, absolutely would definitely at that point stop trading the strategy. But there's a couple indicators of that. My first indicator of stop trading would be way a lot of hype in the market. I've gotten some good gains out of it, maybe made some mistakes along the way, learned from those mistakes, but don't want to be tricked again or don't want to lose money again. And so at this point, I'm like, my strategy is done super well. I don't necessarily believe in altcoins for long term, and so at that point I was like, hey, I've made some gains off of this altcoin, it's time to get out. So that is something that's important to kind of, are you trading altcoins, and then what is going to be your cue to stop trading those, because as anyone knows, if you look at altcoins, they only last for so long until they kind of become irrelevant. And even Ethereum, like, sure, it's had some gains this last run, but it still hasn't passed its all-time highs. I would much rather, over the long term, be trading Bitcoin. And so my first thought when I'm thinking about trading strategies is, am I trading an altcoin? If I'm trading altcoin, how long? And what are my cues to stop trading it? Now, what I was going to say earlier is this strategy, to me, has not become irrelevant yet. And we'll find out over the next month or so, I think. And if it starts to, kind of have some of these nice moves to the upside again and pull itself out of this hole, great. It'll still stay up on the Discord, and I'll still consider it relevant. But if at some point it starts just trailing off and doing worse and worse, then at that point it absolutely will become irrelevant, and I probably will take it down from the Discord, because I don't want things to be up that are not working anymore. And that does happen, over a few periods of time. There definitely will be strategies that don't continue to work. I do my best to keep things as relevant as possible, and that's kind of my general thoughts around trading those in altcoins, all that stuff. Let's look at a couple other examples and a couple other things to kind of keep in mind. One would be your fee structure. So this one's commission is at 0.04%. I would actually, these days, put that up to 0.06 probably, even for myself, who I have way better fees than 0.06. But I always like to leave room for error and know that it's still a profitable strategy, even if my fees are higher. And the reason I do that is because a lot of times your entry and exit points will not be exactly as good as the strategy shows. So if the exchange triggered immediately and perfectly every trade, sure, you might be a little bit closer, but there's always some lag and some problems. There might be a time, there has definitely been times where I had an error and for some reason it didn't take a trade. Unfortunately, it feels like those always happen on winning trades. There definitely has been a few losing trades, though, where I didn't take the trade at all. But that just happens from time to time, and it's generally due to Alertron, or there's just errors if you're trusting technology to do your bidding for you, especially technology that's not super developed. I would say Alertron is decently developed, but it definitely still has its bugs. So I always put my fees higher, and I think that's important for anyone to do that wants to be a profitable trader that's using automated trading. Just allow some room for the automation to have errors. And so I would put my fees at 1.5 to 2 times my actual fees that I'm paying. And then the other thing that you have to think about is funding rate, which is not often talked about, and it's generally only more of an issue if you're trading strategies that take trades that last for more than 8 hours, or go through a funding period. But the funding rate for, let's see if does it have funding rate on here? Okay, yeah. So you can, and what I do with this is I actually use ChatGPT to kind of generally get a idea of the funding rate. And then I will definitely add that to my strategy. So say your strategy is like this daily strategy we were looking at here, and your average trade. Let's look at trade analysis. Average bar in trades is 9, so that's 9 days. And there's 3 funding rates each day, so you multiply 3 times 9, and then you would want to multiply that by whatever the average funding rate is. And so that's something that it's also important to include in your commission here. So say this is your actual commission. Actually, I am going to go back here. You say you're like a VIP 1 level, and you're doing spot trading. And you're going to do limit orders, so that's 0.08, so that's quite a bit higher. So I'm going to put 0.08 right there, and say your funding rate for, for 3 days, it's probably going to be about another 0.08. So I'm just going to put my commission at 1.6, and just look at then I want to look at my statistics after that. Okay. Oh, for some reason, why did that not change? That's weird. Hello. 828. Maybe it did change, and I just, but I definitely thought the 809. 820. Okay, I guess it is changing. So this strategy does work pretty well, even with funding rate in there. I guess it takes your profitable trades down. Let's see, where was it? 0.06. Kind of want to see where it was. 828. 876. Okay, so it definitely takes that down a good bit. Definitely takes your percent profitable down and your profit factor down. Now, is it meaningful? No, not really. It actually is a pretty solid strategy, even with high funding or high. I guess decently high fees in there. But you want to actually look at your real fees, so whatever those are, and kind of add those commissions to it. It's real, and then I would say even add like multiply it by 0.5, multiply your fees by 0.5, and then add that. So you're maybe looking at 1.5 times the fees you actually trade. Those I generally do that a little bit more on shorter, like the hourly or something like that, where trades tend to fluctuate a bit more. If you're on a daily, that time frame is a lot more stable, and generally, if it enters a trade at $25, $50, or even $100 less or more, that's not really going to affect, because you're looking at much bigger trades. It's not going to affect the trade that much. But yeah, that's something that I think is real important to think about. A couple other real quick things here. Just again thinking about if you've been trading, why you may or may not have been profitable. I want to come back to, which one was I looking at a second ago? This one. Okay, so this was one where I got out kind of break even, but I probably started trading back around here. And you can look at Bitcoin. Bitcoin did go on a nice run up here, and the strategy did as well. However, the strategy started kind of declining while Bitcoin was going sideways and declining, and it kind of followed Bitcoin. It didn't make quite the same gains as Bitcoin did on this massive run. And then it, kind of maybe lost a little bit less than Bitcoin did there, and then didn't quite gain as much. But I started realizing that trading, so this is a 10-minute time frame, even with my fees, which are super low. I think I'm at like 0.03 or something like that. I think I'm actually 2.5. Somewhere like that. My fees, my realistic fees are pretty low. But even with that, I would just have little problems here and there where it wouldn't, it would not exit at the exact right price, or for a while I was using limit orders, and some of those didn't get filled, and so I was just having problems with these lower term time frames. And I think that lower time frames are fine to start trading if you are paying real close attention to the market and real close attention to your strategy. And if you have, real low commission, if you have higher commission, I definitely would not recommend trying to trade lower time frame strategies, because the fees just totally eat your gosh, gains up my mind right now. So that's something else to think about. Like, sure, you can make some really great trades here and there. Like the last 4 trades have been awesome. Even the last quite a month or two have been incredible for this strategy. But it's really the sideways markets that just will break you down and really eat away at your profits that you have made. So, could I have kept trading and I would be back in the green again now? Yes, but I decided that my capital would be best used elsewhere where I didn't have to fight the fees so much. I will actually probably start trading real low term. I'll probably even start trading some 5-minute strategies after the next bear market. But I'm going to wait until we're a good year into the bear market, and before I even think about starting to trade lower term time frame, because those strategies, once you're in a bear market and you have a lot of runway to go to the upside, I mean, they freaking crush. They do so well. Definitely outpace most other strategies. But yeah, that's kind of my thoughts on lower term time frames and how not to lose money at them. Is I just don't trade them unless, and in the future I won't trade them unless we are a good year to year and a half into the bear market, and then I'll slowly start scaling into those. My general philosophy is I'm going to trade an hourly strategy for Bitcoin. I'm going to trade a 30-minute strategy for Bitcoin, and I'm going to look for ones that can handle my actual fees and put in realistic fees, and then look at the average. Let's see, the average bars in trade, which is for this it's a 30-minute and it's 13 bars or 18 bars, so that's going to be 9. It's going to be about 9 hours. So you're going to have one funding rate fee in there. So maybe you do your commission plus that funding rate, which is you're going to have to look it up and do the actual calculator there. But add one round of funding rate to your fees, and then are you still have a good profit factor? Are you still happy with the drawdown? Okay, great. So yeah, that's my general thought. It's the other thing, I guess, as I wrap it up, we'll say I am constantly posting, not constantly, but I'm often posting new strategies, new indicators, and it can be really, really. I actually sometimes wonder if I need to slow it down, because it can make users always want to jump on the next best thing. And for some of that, sure, it works. Like a lot of times when I first create a strategy, it usually I'll see it have some runs to the upside. But every strategy at some point is going to have its pullback. It's going to have its areas, especially if you've seen the pullback happen in the past. I would always say expect to see that amount of pullback, expect to have that amount of pullback, and be comfortable trading through it. And if you're not, probably don't trade the strategy. Because then you don't, you have no compass as to how bad can it get, how bad am I willing to trade through, and you end up just, stopping trading the strategy at the worst points, because once you see the drawdown happen, it's really, easy to get freaked out. Okay, as we wrap up, we'll just look at a couple other little things here. This is a short strategy right here. Had a couple nice little wins there in the past, but it just does not trade very often. I've been trading this one just kind of for fun. I'm not trading it at high capital right now, because I don't think that Bitcoin is bearish right now. But it's going to be something that I watch, and as long as it kind of holds sideways or doesn't totally crap out, I will probably start trading this one with more conviction during the bear market, or when Bitcoin hits like 120K to 140K is when I'm going to start thinking about scaling into some short strategies some more. And who knows, it might even get up to 150, 160, but I think that's, in my opinion, pushing it a little bit. We'll see what happens in the markets. All right, there's another short strategy, a couple other ones. This one is, actually seen some not fun pullbacks here recently. I mean, Bitcoin's just been crushing it. So over the last month, this one's not done super well. But yeah, those are my thoughts for today. This is a long video, so for anyone who stuck with it, Thanks for hanging in there. Hopefully, this was in some way helpful to y'all, and I will see you guys next time. Be safe.